Ladies and gentlemen, the markets have flipped yet again today. S&P 500 was up almost 2% earlier today, looking to close out the day currently in the red, down 0.13%. This situation is very fluid because guess what? Janet Yellen is currently testifying in front of the Senate yet again, and every time she does that, the markets tend to fall, and that is exactly what is happening here today. But this is ongoing, so it would not surprise me to get more news in after hours. They like to give you the news drops in after hours. They don't like to do it anymore during the day, so you tend to get a lot of banking updates in after hours. And that's really the big thing the markets are still focused on here. We could say Fed Jerome Powell caused the markets to drop yesterday, but really it was Janet Yellen's comments that not all FDIC claims will be insured, or they call it blanket FDIC insurance, saying that all banks everywhere, 250,000 and above, you're good. Don't worry about it. If your bank goes under, we got it, bro. We got the tab on it. Janet Yellen said that is absolutely not true, meaning if more banks go bust, smaller and mid-sized banks, or forbid the large banks go bust, you're not going to be protected. And she made it very clear from what I have heard so far that investors are not getting saved here. If stocks and companies like Signature, SVB, even potentially First Republic go under, investors and bondholders are not getting paid out. First things first, the depositors would get paid out. So I think that is pretty alarming to the markets. That's the biggest thing the markets care about as of right now. Obviously, once we get inflationary data, CPI, PPI, PCE, those will be more important. But as of right now, it's all about the banking crisis. And you're still getting some digestion from Fed Jerome Powell. Let's not take away from that, because Fed Jerome Powell made it very clear markets are wrong with their expectations of rate cuts in 2023, that is not going to be the case. So that's a little bit of repricing we have to do. And that's kind of what we've seen yesterday and now today. But the S&P was up 2% and is now red. So that is a very, very big move. The S&P hit as high as 400. Or the SPY, I should say, hit as high as 400, and now it's down to what, 393 today. That is a very big swing, and like you can see right here, Janet Yellen testifies. Oh, it's before the House on Biden's full year 2024 budget. So watch for any headlines that come out in that regard. Block. This is interesting. Now, this isn't affecting the markets too much, but Hindenburg is targeting Block. Hindenburg are the same people that once targeted AMC. You also had Iceberg Research, really sketchy source for their short report that came out like a year ago. Do you guys remember that, when Iceberg Research made the short report on AMC? Yeah, kind of crazy. Kind of crazy what's going on there. You also seen the TikTok CEO that did testify in front of Congress, and that didn't go all too well. It didn't go bad necessarily, so we'll see. Your girlfriends and your kids might be a little mad once TikTok does get banned, and maybe not. Who knows what's going to happen. But those are really the major events that are happening today. You also had initial jobless claims that came in at 191,000. Markets were expecting 197,000, so less than expectations, which, as you guys do know, is a sign maybe inflation has some room to go higher here even still, but it's a good sign for the economy. So it's one of those trade-offs, and I do think that is a smaller reason why the markets were up 2% today. I think overall it's a net positive to see signs that the economy is still doing okay. We just need inflation to ultimately go down. And besides that, nothing is really happening today. It's been a very slow day as far as news is concerned. Now, AMC was very strong most of the day today, and you're still up 1.5% at the time of recording this video. It is 3:34 p.m. Eastern Standard Time, so you're still up 1.5%. I don't know if we're gonna close up in the green or if we're going to get that end of the day sell-off. Yesterday's candles on the S&P 500 were insane. The 30-minute candle yesterday from 3:30 essentially to where we are now to the end of the day was a negative 1.71%. That was very aggressive. So I don't really expect that to happen again. But if something similar did happen, it would not be good. You can kind of see it's been like that, I guess, for most of the day. You've been going in a downtrend here. Now, as far as AMC, you were up a lot more. Like I said, you are under our key level that we need to break out above. It is $4.50 per share. You're currently at $4.40, $4.41 almost. So you're almost at that level. You're pretty close here, and we were above it today. We were above it yesterday, but we did not hold that level. So that's going to be the big level that I really want to watch throughout the rest of this week. You're getting a lot of talk about the cost to borrow rates that are going higher, and a lot of people are starting to realize that even if this does go through the court system, it doesn't necessarily have to be a bad thing, as AMC has historically rallied when they have raised capital and dilute shareholders. That is because the fundamentals get better at AMC. It again works against that short thesis, and there is a lot of people that are currently short on AMC based off of this arbitrage trade. So I do think from now until April 27th and after April 27th, a couple of days or weeks after that, it's going to be very volatile, and I want you guys to be fully prepared for that. You can see it reflected in the cost to borrow rates and the short interest. Short interest of free float is sitting at 24.38%, 126 million shares that are currently sold short. Cost to borrow average of 376.9%, cost to borrow max at 385.29%, and cost to borrow minimum at 358.94%. So very high numbers that you are just seeing across the board here with AMC. As far as interactive brokers, you have about 5,000 shares that currently are available to be lent out and traded with a cost to borrow rate of about 214%. So some very high numbers from interactive brokers as well. And this all puts pressure on those shorts to do something with their short positions, to cover on those short positions, to hedge those short positions. Either way, both of those, I mean, that is buying pressure. That will at least help to stabilize the stock. Now, and by stabilize, I mean, I don't think we're going lower than the low that we have seen recently. So I think the risk to reward looks very good for an upside move here to be long on AMC, even with options, longer dated options, right? I'm talking like not even April's, May, June, July, some longer dated options look to be pretty attractive here. And we'll talk about that maybe in another video if you guys want to hear about it. But option activity for this Friday, 139,000 calls that are out of the money, 18,625,000 calls that are currently in the money, 77,000 puts in the money, and 81,000 puts that are out of the money. For the next couple of weeks, lower option activity, like I said in the last video, lower option activity going into a week, not necessarily telling you if it's going to be a big volatility week or not, just because there's not a lot of options. That really has nothing to do with it. If you see, you know, these option numbers, like almost 5,000 calls in the money and 87,000 calls out of the money, if you even get, call it like 50,000 calls that get placed on AMC next week and the stock starts to run through those options, you're going to see some instant hedging, and that is ultimately what gets you those aggressive 20% days. It's those options that are hammering the option chain on a day by day basis. So there is that. The FTDs, if you guys don't know what kind of numbers we're still looking at, well, here we go. This is a record for FTDs as well. Not a single day record, but this is definitely the longest trend of FTDs that we have seen in a while. It is coming to an end as of what it looks like right now, but still there's a couple big days that are still ahead of us. Today is March 23rd. Tomorrow is March 24th. You do have about 10 million FTDs that do come due. Today you had about 11 million FTDs that did come due. And then on Monday of next week, you are going to see Actually, this is Tuesday. It doesn't look like there's anything for Monday. On Tuesday, you have 5.4 million FTDs. On Wednesday, you're going to have 4.3 million FTDs. On Thursday, 3.4 million FTDs, and on Friday you're gonna have about 1 million FTDs that do come due. So there is a lot of option activity, and you know, overall FTD activities that need to be closed out still, and FTDs go along with options or naked shorts. So both of those things we do see a lot of activity in, at least on the option side. The FTDs, the naked shorts, I think you can put the dots together on that one. So there you have that. As far as anything else you guys need to know, tomorrow is durable goods orders. That's going to be big for kind of how the economy is doing. Last month's reading for January was a negative 4.6%. That was not good as a leading sign of economic activity. Now, for this month, or for last month, I should say, for February, you are expecting a gain of about 0.7%. So you're expecting positive territory after January's very bad reading. If you get a negative number, it's hard to say how the markets would react. It's expected to be a major volatility catalyst. A negative number might show that, yeah, maybe inflation pressures are easing a little bit, because there's not as much economic activity. But again, there's not as much economic activity, so that's getting you closer and closer to that recession. That's going to hurt company earnings. Hard to tell which one would be a bigger driving factor for the markets, but nonetheless, that's what we're going to have tomorrow. Throughout the rest of the day today, Janet Yellen is going to be the key here. I doubt it's going to end by the time the markets stop trading, so watch to see in after hours what kind of move you do get based off of Yellen's comments, because I'm almost 100% certain there will be more comments. Just a quick look again at AMC stock. What's going on right now? Up almost 2%. Stock, you want to watch it, get above $4.50 per share, hold that level, then you are in this range between $4.50 and what will ultimately be about $6.20 per share. I'm really just waiting personally for some news on this court hearing April 27th. Once we get new news, I think that's where the stock can actually make a bigger move higher. But nonetheless, looks to be a pretty good situation, pretty good risk to reward right here. Let me know what you guys think about that and everything else here in this video down below in the comment section. In the meantime, hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching. Most importantly, enjoy the rest of your day, and I will see you in the next one.